Let's get some trader talk now coming from Michele Schneider, the Director of Trading at the MarketGauge Group. Good to have you with us. And is it still very much a bear market in your mind?
Well, clearly we're still in a bear situation because the market, although has had some of these spectacular pivot days, is still really weak in that all of the key sectors and the Russell 2000 are still very much down below their 200-week moving average, which means, if you're just looking at it from a 3 or 4 year cycle, that puts us definitely lower. If you look at it from a longer term cycle, like a 6 or 7 year business cycle, we're touching support, which is why 3,500 to 3,600 right now is turning out to be some level of support. If we step back, though, and take a look at the key areas that really are going, I think, to dictate what happens from here. Number one is going to be, obviously, the bonds, not just the long bonds and the 2 and 10-year treasuries, but even the junk bonds, which have been popping off the lows early part of this week, but at the same time still have a tremendous amount of resistance. The TLTs, struggling around the 100 level. The second thing that you have to look at is the dollar. So the dollar is definitely looking more and more like it might have peaked. And that will send an initial sigh of relief to traders. But on the other side, it could also be a real warning sign, given the currencies of the other countries, that if the dollar can't maintain its strength, that the central banks have lost that grip. And then finally, you have to look at the volatility. And right now, as long as VIX remains above 30, then it's still going to be perceived as elevated with fear in the market. So you got to play this thing active. It's going to be more of a stock picker's market. And then we have earnings on top of that. So, it's pretty precarious right here. And I don't see any signs of a bottom. Obviously, I'm open-minded, but I'm not seeing it yet.
What's your trade of the day?
Well, right now, I think more than a trade of the day, I think you really have to watch, and we've talked about this a lot, these sugar futures. I know people think that I'm probably off my rocker because I'm the only person maybe out there, but because I was also around when the sugar rallied in the 70s, when the banks started to lose control, because sugar is not only obviously a food, but it's related to energy, but it's also a really good social indicator because people turn to cheaper food that's laden with sugar when times are tough. We've seen people fighting over it in other countries. And in the United States, that's not quite happened. But as I said, it's a barometer. So sugar futures have been trading between 18.5 and 19 cents a pound. They get through 19 cents a pound, that's a warning. They get through 20 cents a pound, that's more than a warning. That means that we might see another leg up for things like precious metals, but definitely not good for the market.
As far as I know, you're the only trader talking about using sugar as a barometer, but it makes sense. Thank you, Mish.
Thank you so much, Angie.
Go to businessfirstam.com for where to see our show on TV.